Welcome back to Season 3 of The Build Up, presented by Brown Harris Stevens, where we discuss the secrets of building wealth through real estate.
Today, we'll explore how cutting-edge technologies like blockchain and tokenization are transforming the real estate investment landscape. Plus, we'll dive into a fascinating headline about Costco's first ever apartments and what that signals for the future. This is a huge headline because Costco, of course, is known for being one of the biggest retailers, and yet they're entering the real estate development space by building apartments above their retail stores.
It makes a lot of sense when you break it down because Costco is in a lot of different communities and it's really a staple in these communities, and they're a massive warehouse with a lot of space above them. So now they're thinking, why not utilize that space?
So the proposal is for them to build multi-story affordable housing that will cater to either low-income families or individuals who are being priced out of some of these urban areas that have become very expensive with very little supply. And then, of course, the added bonus is that they're on top of Costco.
I think that's the key point here, synergy, right? So imagine living right above Costco. You don't have to travel very far to go shopping. And especially in this kind of climate where gas prices is so high, I think that's a win-win.
Definitely. Let's talk about the real estate side of things for a minute. What do you think about this plan overall? How feasible do you think it'll be for them to pull this off?
So one thing to note is that Costco is a giant in the retail industry, part of real estate, and they've already dabbled in the mixed-use development in California, but now they're actually tackling affordable housing.
The idea of combining retail and residential is very appealing because it really maximizes the use of that same lot.
Yeah, I mean, they have the store there and nothing above it, and there's a housing shortage. Why not maximize that use? But for them, I think the big challenge for this kind of like proposal is just keeping everything affordable overall, right? So we have rising construction costs and, with interest rates. So how are they going to make this work? I think they would really need to partner up with the local government so they can change some zoning laws and perhaps push past a lot of those red tapes to make this work.
And possibly tax incentives as well, which is really one of the only ways we've seen recently that developers have been able to make certain projects feasible for affordable use and use. But with regard to the zoning laws you mentioned, I think that's a really interesting point because obviously there's usually a lot of red tape. It's a very difficult thing to do, but Costco has so much leverage that hopefully they can overcome some of this because of who they are and what they bring to communities.
You have the usable space, so why not maximize it? And there is a housing shortage. I mean, I would find it very difficult for local governments to really, give pushback on this initiative.
Right. And I guess the other interesting part that may help in their success, talking about feasibility, is already their built-in customer base because they have already such brand recognition, such a loyal base. So that can help feed demand and initial tenants in their projects just from their own customer base.
I mean, I think the key word here is affordable, right? I mean, like we mentioned earlier, there are a lot of different rising costs. So it'd be interesting to see how they make this work.
Yeah, I think that seeing Costco get into the affordable housing space is very interesting. They're pretty much one of the first pioneers to do something like this. And so it'll be interesting to see, and we're talking about what this signals for the future. Perhaps other big retailers will see this as an urban experiment and how it can really maximize their real estate, their earning potential, and maybe we'll see more of this come in the future.
I mean, I'm for anything that will really help with this housing crisis that we have. And if it's affordable, why not?
Definitely.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. We work with Brown Harris Stevens and many other top real estate firms, staging their homes to sell quickly and at the highest price possible. Our staging is affordable without sacrificing quality or design. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
When we first started Excel Real Property Management 11 years ago, we did so with the intention of protecting the investment community. Here at Excel Real Property Management, we focus specifically on serving the needs of individual apartments, townhouse, and small multifamily building owners both in Manhattan and select neighborhoods of Brooklyn. Our services encompass everything: rent collection, expense payment, handling maintenance and repair, turnover between tenants, insurance needs. Literally anything that an investor would typically handle him or herself, we take care of for them. Whether you hold one individual apartment or a rental building that houses 20 units, Excel is here to help with all of your specific needs.
Today, we're thrilled to welcome Jerry Chu, the visionary CEO and co-founder of Lofty AI, a groundbreaking platform that's transforming real estate investing through blockchain technology. From democratizing property ownership to unlocking the secrets of building wealth with as little as $50, Jerry is here to share his innovative approach and how it's making real estate more accessible, transparent, and profitable for everyone. Jerry, welcome to the Build Up.
Thanks for having me here. Glad to be here.
We're very excited to talk to you today, and you have quite the background, right, in mathematics, economics, and programming. So talk to us a little bit about your journey of what inspired you to want to merge all of this whole, very vast background of yours with real estate investing.
Yeah, that's a great question. So I think when I was younger, I guess my dream job was to be like a quantitative trader. And so I kind of built my studies around that. So I studied math for undergrad. I have a master's degree in financial engineering and just wanted to go be a quant on Wall Street. And I got an opportunity to work briefly in the field. And, I guess the reality is, they say never meet your hero. I guess for careers and jobs, it can sometimes be like that too. And so I was like, this is not quite as interesting in many ways as I imagined it to be. And, I love the people I worked with, but I just didn't really see myself kind of being in the corporate politics for like the next 20, 30 years of my life. So I decided to teach myself how to code and maybe go into tech, where I met one of my co-founders, Max, at this job I had. And I've always wanted to build something myself. And I guess sort of from that quant background, which is typically, using a lot of sometimes unconventional data sources to basically try to, create alpha for yourself and your investors by investing in stocks and different equities and debt that's, available for trading, and essentially try to beat the market. And so I kind of always had that mentality, and I already knew, and, a lot of people know based on the performance in the industry that it's possible. One of the ideas I had was actually there's a lot more random noise in equities and the stock market in general. But for real estate, I actually think it was, I guess the best way to say it is like more easily predictable if you have the right data, or at least that was my theory. And so I basically tried to take the approach, and that was the initial iteration of Lofty. It's like, hey, could we take the same approach that quants use on Wall Street and basically use all of this data in real time? And sadly, the real estate industry is typically lacking in technology, a lot of the cases. And when they do use data, it is often lagging, sometimes by, quarters, sometimes by years, quite literally. A lot of census data is actually used in the industry, and I think that's once a decade. And so, it really, a lot of people have outdated information. And the idea was you could have better data, make better predictions, and know the market better than anyone else, and essentially make very smart acquisitions and investments ahead of time before everyone else realized. And that was essentially the first iteration of Lofty and what kind of got me here.
Well, thanks for sharing that. And, for us, we're in real estate too, so we understand the importance of data. So we're very happy that you found a way to really utilize that and through this platform. But just doing some research about it more, we've seen that blockchain and tokenization play a really significant role in your platform. So, these are terms that we often hear, but me especially, I'm not exactly sure what they mean. So can you explain to us, how do they work, and why is this revolutionary for real estate?
Yeah, absolutely. So tokenization is sort of a fancy word. It basically just means converting the equity, the legal ownership of equity in an underlying real estate property into tradable tokens on the blockchain. So, everyone kind of knows about Bitcoin at this point. And the real benefit to a lot of cryptocurrencies and things that are tradable on the blockchain is that they don't require intermediaries, and they don't have a centralized party, which means they essentially run 24/7, no stop. So if you actually invest in stocks, you'll often see that on holidays, federal holidays, the stock market is actually just closed down, and you can't trade that day, right? For most people, that's not a big deal, but imagine you just really needed, you're in closing or you want to sell your real estate. It's kind of a bummer that there are days where you just you can't do it, right? So that kind of sucks. And so the whole idea of tokenization is basically you take this asset that is traditionally illiquid, mostly done through sort of this peer-to-peer over-the-counter style with a ton of documents. You guys have always seen this, like just hundreds and hundreds of pages of documents you have to sign. And really, the process could take sometimes, days, weeks. In bad situations, we've seen closing take upwards of months, right? And basically transform that asset and that process into something where you could buy and sell with a click of a button as easily as you are buying Bitcoin or stocks on Robinhood. And that's really the idea behind tokenization and how it works. Legally speaking, the way you enable all of that, at least for now, the route that we take and most other folks in the industry takes, is basically, you have an LLC, right? That's a pretty traditional structure. Legally, the deed of the property is owned by the LLC. And you're basically turning the shares or the membership interest of the LLC entity into these tradable digital tokens. And so the legal framework that's established is whoever then owns these tokens, right, based on the legal agreement and the blockchain transactions, you can prove this in court if it ever came up. You can say, hey, I'm the legal owner of this LLC. And because the LLC is the legal owner of the property, I basically own the property. And that's how legally all of this works. Now, the real benefit here is, I would say, ease of transaction and liquidity. So real estate is a massive industry, as you all know, but the biggest problem plaguing it has been liquidity, right? Most people don't do this, but imagine you bought a property and you sort of like change your mind a month later and you wanted to sell it. Most people, you'll end up losing a ton of money, and that's just not a very easy process. With stocks, you can buy some shares in Apple, and like tomorrow, if you don't feel like, you're like, oh no, I made a mistake, you can sell those shares instantaneously. And for in the most case, if there wasn't a large market event, you probably get most of your money back if maybe you make a little bit of a gain, right? But that's just not possible in real estate until now. And so on our platform, for example, you can buy, instead of buying the entire property, you can buy a fractional portion of it, right? So for as little as $50, you can become a co-owner with other people in the same property. And then you can buy this $50 token, and then like immediately in 5 minutes, if you decide, hey, this is not for me, I changed my mind, you can just click a button and you can instantly sell that token without the need for a traditional counterparty. You don't need to have listings. You don't need to, have open houses. You don't need to, do escrow or any of those traditional processes. So really, at least from our users, that's the biggest benefit to them so far.
Got it. And in terms of, with real properties for us as brokers, and, if we're selling a house, there are closing costs and, just extra expenses that buyers have to be aware of. Do they have those kind of expenses with these kind of transactions?
Usually no, but for the first time you do. So when we say the process of tokenization, the very initial step is taking a property that hasn't been tokenized and like putting it in this legal structure I described. And in many cases, in those instances, you do actually need to involve the traditional escrow industry. So you do a quick claim deed. Typically, the way it works is sellers come to our marketplace and they say, hey, I want to tokenize my property and maybe just sell 10% or 25%, whatever they desire. And basically, you'll have to loop in a title company at that point, where they will quick claim the deed from either under their personal name or an existing LLC into an LLC that we've created and structured for them. So that process still involves them. But once a deed is owned by this LLC and the tokens are tradable on our platform, you basically never use title again, unless you want to what we call offboarding, which is, you're free to come buy the property yourself and then say, you know what, I don't want to tokenize anymore. I want to convert it back to just under my name or into a more traditional LLC. You're allowed to do that. But as long as you're not doing that, the tokens can basically trade, in the back end, like infinite number of times forever between hundreds and thousands of different people from all across the world. And every transaction happens instantaneously with a click of a button, and you just never need to involve escrow or sign paperwork in that traditional sense anymore.
So one of the ways that we understand that investors can benefit from this type of fractional ownership is that they get certain dividends from the cash flow that these properties produce. But can you talk to us about the equity side and the appreciation side of these properties? Because that's another big part of real estate investing, is not only the monthly cash flow, but also the hopefully upside and appreciation over a long-term period. So how is that paid out, if at all, to your investors?
Yeah, that's a great question. So on our platform, so what's interesting about us is we're a pure marketplace. So we're not a managed fund. You're not investing with Lofty. We don't recommend you any investments. We don't manage your investments. We're just a platform that connects buyers and sellers together. And we build the technology for the tokenization and also the instant trading. So that's kind of all we handle. The way the rental income distribution works is it's pretty much all automated. The renter and the tenant, if it's a income producing property, we don't have fixed criteria, so anyone can really sell anything. Like, for example, we have like raw land that's in like upstate New York, and the seller is planning to list more. That is mostly an appreciation play. So they want to like install solar on there, and then there's discussions because we don't manage anything. The owners actually vote through our portal. Sometimes there's 50 people, sometimes there's 100 people, but in a very democratic way, they actually vote as a group on how to manage their asset and what to do with it. When to sell, how much to sell it for. So it's all up to the users. And the way distribution works is if it's a rental property, the renter or tenant will still pay on the monthly cadence to the property manager, who will then, could be a third party person, or it could actually be one of the owners on the platform who like sort of volunteers and says, I'm close by, I have this experience, you guys should hire, the other owner should hire me and vote for me to be the property manager. That's doable as well. But the property manager will then route the money to the entity's bank account. So every property is held by a unique entity on the platform. And every entity has its own bank account, right? And so it will be sent to that bank account. And these are sort of digital first bank accounts, which means that programmatically we can use an API to connect it to our platform. So when you click a button and say, hey, I see this rental income building up in my portfolio and it's, X dollars now, I want to withdraw. You just click a button and you have many options. You can get it as USDC, which is a stable coin, pegged to the dollar, but on the blockchain. So you'll receive it, no transaction fees, instantaneously to your wallet, which you can then use to do something else. Or you can have it very traditionally sent to your bank account. And once you select the process, essentially you select the amount, and our system knows, let's say it's $100 worth of rental income, but not $100 might be coming from the same property. You might own 50 different properties, and like $3 came from this one, 50 cents came from the other one. But when you click the withdraw button, our system, through these API calls to all the different bank accounts of these LLCs, will know exactly your share, your pro rata share in them. So it will allow you to withdraw your portion of the income, but not allow you to touch other people's income. So that's how rental distribution works. And something that's fairly unique to us is you actually get your income on a daily basis. So that's really nice. You get to buy something and you get your portion of the rent for that day. So, if there's 30 days in the month, is divided up by 30. And it's nice for people to be able to buy it instantly and then see later that night, it's like, hey, I received my first sort of dividend or distribution.
In real estate, it's always so much of a long-term play that a lot of that reward doesn't come instantly. So it's a really nice platform and to create that for real estate, because it's not traditionally the way it works. But in terms of, you're saying that you're really just a platform connecting these buyers and sellers, and you're not the ones advising on which investments you should and shouldn't make. So what is the process that investors go through on the platform to vet out these different investments? Because it doesn't sound like, and you can say if we're wrong, but it doesn't sound like you're vetting any of the properties that comes across your platform.
Yeah, so we don't vet on an economic basis. We sort of vet on a, moral and integrity basis. So we actually do background and credit checks on sellers to our platform. And you'd be surprised, like we've filtered out people with like mortgage frauds and stuff in the past. So there are like certain sellers and certain properties we just won't let onto the platform, period. But once you sort of pass that bar, anyone can sell anything. Look, we believe in the free market, so we don't really vet in terms of like, do we think this is going to be a great investment over the next 10 years relative to these other things? You're right in that each individual user and investor needs to sort of vet that themselves. So the approach we take is, how do we mirror this with the traditional industry and what people are used to as much as possible? So if you guys have buyers that you've worked with in the past who are, buying for investment purposes and not really for a primary home to live in, they'll typically sort of have their own criteria, numbers that they're looking for, sort of almost like filters. They've have these, metrics in their head already. Like, I'm looking in this area, it has to be this cap rate, like ideally built, within this time period, like, this is the style of the home I'm looking for. Maybe it's a duplex, whatever may be the case. And they'll often ask for a lot of documents, either from you guys or during the closing process. They'll ask for inspection reports, appraisal reports, things like that. So we basically sort of analyze what people typically need, and we just force all those documents to be disclosed ahead of time, so that you can access them remotely. So there's a Dropbox folder attached to every single property. And in it, you'll be able to see the inspection reports, the appraisal reports. You'll be able to see the historical rent rolls. You'll even be able to see, like, if there's any work done on the property, you'll actually see the original invoice and how much that invoice was. You'll get to see which company they went with. You'll see the scope of work completed. So think of this as, traditionally in real estate, there's a lot of information asymmetry. Like, there's a lot of stuff that's done to the property over the years, and the information is just lost. Like, nobody really knows how much of work they did, how much it cost, when it happened. Imagine this to be like a paper trail that just exists in perpetuity and continuously builds up. And so what we expect is every potential investor come to the platform, find the properties they're interested in, and sort of go through all these due diligence documents on their own. And they'll form an opinion at the end of like, hey, this is something I would like to invest in. And then they can pull the trigger.
And you're saying that you've vetted all of that information though, right? Because I know you don't give advice and do all of that, but you've vetted that all of that information is correct. Okay.
And to add to that, I think a lot of our listeners and a lot of people in general understand some of the inherent risks when it comes to real estate investing overall. You can have issues with the tenants, issue with the property itself, market cycles, and so forth. So I think there's obviously those types of risks also associated with these types of investments, but tokenized real estate specifically is still a relatively new concept. So can you walk us through what some of the risks are as it relates to this form of ownership, this type of investing, for those who maybe not as familiar and don't know what they don't know and don't know what they should be looking out for?
Yeah, I would definitely say right now the market size is smaller, so there's a lot more volatility. And so when you basically turn an asset that's extremely sort of illiquid and stable, like real estate, into something that is extremely liquid and sort of volatile, like stocks and cryptocurrency, you get both obviously the benefits and drawbacks of that. And so something people need to understand is fundamentally you're still buying real estate. But the numbers, at least on the platform, might move in a way that you don't traditionally expect of real estate. So for example, if you bought $1 million house, right, you don't really expect the value to fluctuate like the next day. You're like, oh, it's probably still worth $1 million. And like even 3 months later, unless something crazy happens, it's like probably still worth $1 million, right? On our platform, trading begins when a property is tokenized and sort of made public. And based on supply and demand, the value is constantly fluctuating. So like, in theory, the property was listed at $1 million, and you bought something. You could come back in 3 days. It might be worth like 1.3 million in theory, because there's just a lot more interest in that property and people keep buying and no one's selling. So it pushes the price up, right? In the reverse, sometimes it happens where, one of the owners who might own like 10 or 20% need the liquidity and they want to get out. And so they just like instantly sell 10% of the supply. So now imagine if someone, on Apple, like with Apple stocks or shares of Tesla, sold 10% of all the shares in a single order on the stock market, the share prices would crash as well, right? And so in this case, you might have bought it at $50 a token, and literally nothing has changed about the property. Tenants still paying rent, it's the same property, and nothing's been damaged. A month later, like there could be a spike in one day where now the tokens are trading at like $25 a token. And it's really important for people to understand that that is just the dynamics of making real estate liquid and having it based off of supply and demand that is trying to find sort of price discovery, essentially. So some people get scared and they'll like instantly then try to sell at $25, basically losing 50% of their investment. It's like, that's not very smart because, again, fundamentally, nothing's changed about the asset. And in many cases, within a day or two, because other savvy investors see this and they say, wow, there's $1 million house that I can now buy for $500, essentially. A lot of people start coming in and they buy it and it pushes the price back up. And that dynamic is basically constantly happening on different properties on the platform. So that is definitely the one thing I would say people need to understand and get used to if they want to invest this way, is to just not be spooked by the volatility, which I know is just so ingrained now. Like real estate is stable, it takes years. And sometimes for people who kind of zone out and then log back in a month or two later and see like all the values being vastly different than what they expected, it can, scare off a lot of people.
That really explains a lot. I think it's just still relatively new, right? And so where do you see blockchain taking the real estate and industry, I would say, in the next 5 to 10 years?
Yeah, I think, more and more you're going to see the industry adopt this. It's one of those trends where nothing happens and everything happens all at once. So I think thinking about it from a linear perspective is going to be incorrect, meaning that if you think, hey, here's where the industry is today and it took 10, 20 years for it to get here. So, takes another 20 years for it to double, right? Or something like that. That is a wrong way to think about it. In reality, it's probably going to be an exponential adoption process, meaning it's taken 10, 20 years for it to get here. But then within the next 5 years, you're probably going to see a 5x, maybe 10x improvement and adoption rate. So one thing that I'm really surprised by and also sort of pleased by, because obviously I'm in the industry, is that a lot of our sellers and users and customers aren't actually crypto savvy people, and they're not necessarily younger. A lot of times they're very traditional real estate folks, 50s, 60s, older people that don't even know what two-factor authentication is and like have trouble setting it up and will like email us to get us to help them. They're now able to use a platform and they're adopting this and they're interested in this. So I think that's very, very telling. The way we've approached this is, look, we're not trying to fundamentally change real estate from what people are used to, the dynamics, the economics. What we really think should happen is just that the process for real estate transaction is just very lagging and isn't something that people find pleasant to deal with, right? Like of all the real estate investors, and many of our sellers own hundreds of units across the country, we say like, look, this is your career. How do you like it? They love it. Do you like investing in real estate? Do you like the asset? Do you like the industry? Great. Love it. What do you hate about it? It's like, oh my God, like the process, like every single time I have to do a deal, it's just so annoying, right? So fundamentally, we think, blockchain really just helps improve the process. So people still do the exact same thing that they're already doing, right? But they just do it in a way that is a lot better and more efficient and faster for them and saves them time, right? So I think more and more you're going to see, especially the lower end of the market and the investment market first, jump into tokenization of blockchain a lot more. In terms of sort of primary residence, I think there's going to be a lot of resistance there just because people can say what they want, but at the end of the day, I think most people are more comfortable having a realtor, having someone they trust sort of advise them on things and find them properties they otherwise wouldn't have known about, like pocket listings, things like that. And especially I think on the luxury end of the market, people are going to expect and demand white glove service. So I think there's always going to be humans in the loop there and sort of, agents serving people there. But definitely, I think for homes that are, on the lower end of the market that are a lot cheaper, and pretty much most of the investment market, I would expect, will eventually all be tokenized and sort of done in this way.
Wow, that's really interesting perspective and prediction because we've been in real estate a decade now, which is, a good amount of time. And it seems that our industry is just so resistant to adopting new technology in the most basic ways, not even like something more advanced like tokenization and all of that. So it's interesting to hear that that's, your prediction, which makes sense given, what you're doing on a day-to-day. But what do you think it would take to get that exponential adoption that you talked about for people to, in an industry that's so resistant to this type of change, especially when it comes to technology? What would it take for people to start to adopt this in a greater way?
I think it's just going to be like most viral products that's consumer related, going to be word of mouth. People don't want to be sort of sold to. They don't want to like have someone like tell them, hey, this is the future. Like you gotta really do this, and they don't know who that person is. In our experience, what we found with sellers, especially the profile I was explaining to you earlier, sort of like older folks who's not really familiar with technology, like why of all the things they're doing, they're adopting what we do, which is literally on the sort of cutting edge and like right now still mainly for early adopters. And it turns out it's that humans really trust their friends and like people in their own circle a lot more. And so real estate is it's like a large market, but the network is in many cases quite small. Like a lot of investors know other investors in their city. They've done deals and business together. And there's certain levels of trust that's kind of built up and a certain level of mind share that goes around, right, through that network. And so what we found to be the most convincing for folks and what's worked best for us so far is, you just got to get that first person. But once someone and in the past, like it's very interesting. They'll come in like very antagonistic, like, oh, this like sounds like a scam. This must be a scam. Like, how are you scamming me? And we just show you all the documents, like, explain how this works, show you all the legal docs, legal structure, or like go talk to your own lawyer if you don't think this would work. And eventually they sort of do their due diligence, and then they become a believer and like, okay, actually this like makes sense to me. And they try it once. And I think the experience from, especially as a seller, from oftentimes having your property on the market for months and sometimes, half the year and nothing moves, to listing the property in under a week and then going out for lunch and coming back and realize you've already sold $300,000 worth of the equity out of $1 million house. And you're just like, oh, wow, that was really easy. I think that aha moment is what gets them to be like, okay, I can see this is sort of the future now. And then they can't keep that to themselves. At the next meetup, at the next, golf event that they go to with their other real estate friends, they're going to basically talk about this nonstop. And that's when we realize like that's what gets people interested, because it's not us telling them, hey, this is the future. It's their friends like, no, trust me. Like I did this. You have like, this is the best thing in the world. That's what gets other people interested. So I think we're just very much in the early stages of that. But, like virality kind of spreads exponentially. So the more people that know about us, the more people talk about us and talk about this sort of technology and structure, eventually you're going to just get a lot more people interested.
Definitely. That makes a lot of sense. And I think the other thing that lowers the barrier to entry, even if there is some distrust up front with a newer investor, is that you can start with such a minimal amount of investment. Yes. So if you don't trust the platform, you can just put in, a few $100 or even less just to see how it works, get comfortable with the platform. Whereas sometimes one of what with the feedback we hear with, a lot of investors is the barrier to entry is very high. You need so much money for a down payment. Right. For a traditional home. And, many of millennials, our peers and others, find it really hard to obtain that down payment. So they never get started with real estate investing. And one of the number one questions we always get is, how can I start investing if I don't have all of the money for a down payment? And that's why some of these alternative investing platforms like yours and others really can give people a gateway into this very, lucrative industry, get them used to, like you said, analyzing properties and all of that without necessarily needing a few $100,000 in the bank to invest. So I think that's also another really interesting feature about what you're doing is you can start with so little. Even some funds have higher minimum investments. Most funds do. So this is, that really stood out to us. But just in closing, this is really all exciting. We are, really big advocates for how real estate can be revolutionized through technology, blockchain being one way.
Before we let you go, what is one of your most successful story that really inspires you to keep going?
Yeah, I would say there are like a few instances I can really point to. Like, you're on the right track when like, I don't think any product is perfect when you first launch it, and definitely ours is not. And I remember in the early days, there were a lot of bugs and the UI was kind of all messed up because we're focused on building sort of the bigger backend features. We would have a lot of users just like constantly, and these are very successful people. They're usually very busy and like would not give most people the time of the day, but they'll email us multiple times throughout the day and like respond immediately. Like, hey, I did a screen recording. There's a bug here. Like, you guys should fix that. And then, when we ask for more information, they like respond right away. So that was really sort of touching and a really good sign that like people want the product, that they're like so interested in the product getting to the final version and the vision that they're like helping us build it along the way. And that's really great to see from our customers. Another example I've really seen is like people just being very creative and sort of taking the structure that we have on the platform and doing very unique things with it. One of them being rent to own. So one of the tenants at a property actually found out that like, hey, the property can be traded on Lofty. So she actually started buying tokens in the property that she's renting. And she's like, she's like a grandmother, she wants to be close to her daughter. And she's basically like, hey, I used to not just be able to do this. But now I can just slowly build up equity in this property whenever I feel like it. Like, no obligation. If I don't have the income this month, I just won't buy any. But if I have surplus income next month, I can. And over time, I just plan on buying this house and owning it completely from the other owners. And that's just really nice. Like, that's not really our business model. We don't make money from that. We don't force anyone to do it. We don't prevent anyone from doing it. It's just this organic thing that like the tenant and the owners through the platform kind of constructed themselves, and everyone's very happy about it. And then, something you mentioned earlier as well that I always thought was really funny and interesting. One of our best, I think, users and investors on the platform, I think he's personally, as like one individual, have transacted like over $3 million at this point. And again, keep in mind, there's no leverage. So this was all cash on his end. I remember our first interaction was, and we make ourselves available to our users so they can like reach out to me anytime through email. I jump on Zoom calls with them to walk them through stuff and answer questions. But I remember on our first call, he basically said, oh, I thought your platform was like a complete scam. And that thing we were talking about. And because the minimums were so low, he's like, I just felt like this was way too much work and effort to scam me out of $50. So I just tried it anyway. And now, lo and behold, he's literally like the top user on the platform. So that was also really interesting to see as well. So it's these sort of small anecdotal evidence that we see, and to, like, that we realize, well, hey, these people aren't really that unique. They're just like everyday people. And if they're willing to adopt it and they're willing to sort of take the leap and understand a new technology, and understand how to use it, it's just a matter of time. Eventually, everyone will kind of jump on the train.
Agreed.
That's a great anecdotes. Thank you for sharing that, Jerry. And thank you so much for being with us, for talking more about your platform and how you're revolutionizing real estate investing, which very much needs it. And yes, thank you for your time. We were just so glad to have you here with us today.
Thank you for having me. This was great.
Hey, it's Stephen Bailey from Roadway Moving and Storage. As an official moving partner of Brown Harris Stevens, we know that your clients deserve more than just a move. At Roadway Moving and Storage, we turn moving into an experience they will love. From specialized services to a white glove treatment, we've got it all covered. When you choose Roadway, you're choosing a peace of mind for your clients. Plus, our referral program is the most rewarding in the industry. Want to learn more? Shoot me an email at steven@roadwaymoving.com or visit roadwaymoving.com.
Do you have a big move coming up? I'm Scott Nadler with Cross Country Mortgage, and I've got the loan to match your dream home. Whether it's your first or your fifth, I'll make the process quick and easy. Call me today. Let's make it happen.
That wraps up our conversation today with Jerry, where he explained how blockchain and tokenization are really making wealth building through real estate much more accessible.
If you enjoyed this episode, please like and subscribe to our show. And don't forget to share it with anyone who's interested in leveraging technology to start their real estate investing journey.
This podcast is for informational purposes only and does not constitute tax, legal, or investment advice.
For specific recommendations, please consult with your financial, legal, or tax professional.
or always leaves your text on red. Leaves your text on red.
Built the corporate group with $1,000 loan.
Tell us a little bit about how you actually came from.
Welcome to the build-up genre.
Thanks for having me.
We're coming to you here from Studio 1873.
It's not 57% over $2.7 million.
So then, cheers.